Welcome to Darren Batchelder's Real Estate Investing Show. Each week, you will learn how to grow your wealth through real estate investing. Be introduced to the players that are getting it done and learn how you can get involved. And now, here's your host, Darren Batchelder.
Hello, everyone. Today we have a very special guest. We've got Juan Vargas here with us today. Juan, appreciate you coming on the show.
Hey, Darren, it's my pleasure. Certainly appreciate just excited to be here with you and share my story and hopefully add some value to your audience as well.
Fantastic. So just a little bit on how I know Juan. So we met being part of the same multifamily mentorship group, kind of running the same crowds, go to a lot of the same conferences, know a lot of the same people. And Juan actually has a podcast himself. He's had for several years. And so I want to talk to him about that as well. But before we get going, just wanted to, if you could share with the listeners, how many properties and how many units are you currently investing in?
Yes, great question. A little over 1,000 units on the LP side. So I'm a limited partner as well. I think it's solid to be able to do that. And then on the GP side, a little over 1,300 and deals that we directly oversee and lead about 900 units out of those 1,300.
Fantastic. So maybe start with, what were you doing before you got into real estate investing? What was your career path?
Yes. So what I did before was I worked for BMW. So I was a technician for BMW actually. I did that for many years. Growing up, I skipped the traditional college route and I went straight to a technical school. And that was because, that's what, my dad told me to work hard with my hands and, learn that route, right? Work hard, work hard with your hands and go that route. So I did. I went to technical school. I ended up working for BMW. Still went through the college afterwards, but yeah, that was my path. Mm-hmm.
So that's an interesting path. So, I mean, you raised to, hey, go to school to get a technical
mm-hmm.
skill so that you can get a job and earn an income that way. At what point, and you said you did that for many years, at what point did you all of a sudden say, you know what, there's something different, I'm going to try something different?
So I remember actually to this day, I remember, driving home. The thing about a W-2 job is you're driving to work and then you're driving back home, and that could be just an hour each way. At the minimum, right? Sometimes, and I remember driving home and there's a ton of traffic, and I remember also thinking, I was like, it's time for a new vehicle, time for a new truck, and then I was stuck in traffic at the light. And thinking, if I go get myself a new truck, then that means I'm going to be stuck at this job for much longer. That means I'm going to be stuck in this traffic for much longer as well. And what's the end? What's the end goal here, right? And I thought to myself, there's got to be a better path. I can't continue to do this. Just not spending time with my family either, right? Working really late hours. So then I was like, the path is going to have to be real estate for me. And I started looking into real estate, started looking into single family. And really that's how I got into real estate was through single family. And then, didn't look back from there.
So what year was that when you purchased your first
2015.
2015. And how did you know? You said the answer was, you're at the light, you have all, you say, where's the end goal on this? What's the better path? And you concluded real estate, but I didn't hear anything that you said prior to that would even put that idea in your head. So how did you come up with real estate?
Yes. So my dad was actually in real estate. He's been in real estate since I was, young. And I remember him, telling me one time, like, hey, you should probably do this as well. But, I was a younger kid. I didn't really think of doing that at that time. And, as I researched more, it just made more sense for me. Right. And so it was already something that I was thinking about. And as a matter of fact, I had already tried even before. I had tried in, around 2009, 2010, But I was trying to buy houses at that time the traditional way, which is, through a bank, and you're getting approved, you're getting, finance and all this good stuff. And, during those days, those properties and those deals were not, taking off like that. They were, cash buyers, hard money lenders, that type of thing. And so, I wasn't competitive enough, during those days. And so that's why, when I was stuck at that light, I reverted back to that. I was like, you know what, I'm going to try it again. It wasn't my first time, thinking of that. I'm going to try it again, but this time I'm going to make it happen for real, so that's how that came about,
That's awesome. Let me see here. So you said research. What did you do for research? Because you said you started to research it.
Yes. So research, that was reading books, as anybody has any interest, you start to find the best path, for your research. And that was books, some internet as well. I ended up coming across BiggerPockets, I think in 2014, which is a great resource for anybody out there looking to really learn. And there's A through Z in that. So, but yeah, a combination of all those, I think really were there to help and assist me in my learning, progress and path.
That's fantastic. So BiggerPockets is an online, forum that you basically, that goes over all kinds of different real estate investing. And it has forums where people ask questions, and there's threads that you can see people that answer. It could be single family, it could be all different types of real estate investing. So you can focus in on the niche that you want to look at. There's also all kinds of webinars you can look at, etc. You mentioned books. Was there one or two books that kind of stood out as, critical in your thinking and motivation?
Yeah, actually, the very first book that I picked up, and specifically in real estate, was the Millionaire Real Estate Investor, and I think it's I don't remember the author's name. Was it Gary Keller? I can't remember the author's name, but yeah. So that was a great book. I remember reading it, opening it up, and I couldn't put it down. Right, it made a lot of sense, and that's sort of it just added more fuel to the motivation that I already had at that time, and I was excited to get going in that. So, but yeah, besides that book, there's several others, but that was my very first one. Yeah,
that's cool. So I actually bought that book recently. It's on my bookshelf, but I haven't read it yet. So I'm glad to
that's
hear
interesting.
You say
Yeah.
that. It was a recommendation from somebody else, and so in any event, I love that you said that you were going down a bigger path, that your dad had done it. So, that's a consistent theme I see with a lot of successful real estate investors, and is that they find other people that have already done it, and then they go and mimic their success. So you saw your dad do it. I'm assuming your dad did single family, so that's
correct.
Kind of kick started it, and then so you bought single family, and then how did you even think about transitioning over to multifamily? Because now you're doing very large properties.
Yeah, that's a great question. And really, my single family, one of my single family properties was the reason why I decided to get into multifamily. So I had this property that was a good single family rental, and my tenant there was a great tenant. He ended up having to leave. He was in the military. He ended up having to leave and get stationed somewhere else. And so then I went back to the market, right, to get it rented again. And, it took me a little longer than a month. And so what I realized at that point was that, I had to pay for the expenses. I had to pay for the mortgage. I had to pay for the utilities. I had to pay for the turn to really, get the property back in rent-ready condition. I was setting aside some funds that I thought were more in cash flow, but then it sort of kind of went back to the property, and I was like, you know what, this is my fault. Sort of a light bulb went off right there. It's my fault because I was relying on one person, right? So I was relying on one person, so I was 100% vacant because of that. And so, the light bulb went off, and I thought to myself, you know what if I would have had 10 units, 10 different residents paying, right? If one of these residents would have left, then I still would have been 90% occupied. So it was just simple, idea that just kind of came into my head, and I was like, you know what, I'm done with single family. I'm going into multifamily, and not only that, but it was difficult to scale, right? I had a goal in mind, and it had to take me 60, 70 houses, and by the time I got to that point, it was going to be a really old man. So I didn't want to
Right.
wait that long, and so just multifamily just made a lot of sense. And I was also researching, as I mentioned earlier. I was learning more about it, so it wasn't something that just popped into my head. It just, this is the last straw for me. I'm doing multifamily because I had already learned a little bit, right? So that's kind of how I jumped into multifamily, and did no more single family from that point.
That's great. So a few things off of that. One is, I talk about this over and over and over again, is like, look, you got to get educated, but once you get educated, you got to take action. And you wouldn't have gotten into multifamily had you not purchased, a few single family, because that's where your mindset was at the time. And then once you did that, you had that experience, and then that forced you, or at least changed your mindset to go after multifamily. So, listeners, at some point you got to get off the fence and actually, get something done. And then all of a sudden your goals change. Your goals may not be that big at first, but then your goals change after you get the experience. So I had a very similar experience to you. I started with a new construction duplex. Took a year to build. Once, we leased both units like nothing. It was very easy. In the first year, it was like, I just got the money wired into my account and ACH'd into my account, and it was easy. But on the first renewal, one of the tenants ended up buying a house and moved out I think it was like the end of October. So now we're trying to find a new tenant for November, and it went vacant November, December, and January.
Oh man.
So 3 months. And so I went from 100% occupied to 50%, just like that. And for me, look, I'm older. I had capital. It wasn't, it didn't change my lifestyle at all. I had to pay out, cover the difference, but it wasn't like a big deal for me. But for some people, that's a huge deal to all of a sudden be expecting that cash flow. And I think that people underwrite single family differently when they first get in. They think of single family or even a duplex as, all right, what's my total income for the year? What are all my expenses? That's my positive cash flow. But they don't build in, vacancy. And in multifamily deals, every deal, there's some vacancy that's built into it. So it's already in the numbers.
Yeah, that's a really good point. I mean, and the difference being that a lot of the single family, you're right. Vacancy or economic vacancy, right, including your bad debt or even concessions and all that good stuff, right. The difference being, in my opinion, in my eyes, is that single family, most of them will be run by maybe a husband and wife. Maybe it's a side gig that you're doing, right? But multifamily is a business, right? You have the lender is going to be underwriting it as a business. You have to treat it as a business, so therefore you have to account for the economic vacancy, proper and reasonable expenses, and in single family you tend to not do that. It's like, okay, well, here's, like you said, here's the rent and here's my expenses, and that's it. This is my net. But there's a lot more to it than that. And I think that, that's why some people may run into trouble, right? You're not treating it as a business 100% from the very beginning, right?
Exactly. So look, today's a very, very, very hot market, right? Interest rates have come down, cap rates have come down. You own a lot of different properties. You're both as an LP, as a GP, as a JV GP. So are you a buyer or seller in this market?
I'm still a buyer. I
Right.
think that we certainly are in a very, very hot environment. But there's several reasons for that, right? And we don't have to go into all the details. But I to summarize, we're still buyers. We're still bullish on the market. We're certainly cautiously optimistic is the right way I would say it, right? Because again, we are at the top. with pricing. We are at historical low cap rates, but we're still having consistent and strong rent growth, job growth, all those items that we're looking for, and so we're still looking for new opportunities.
So, you said you're not going to talk about all of it, but like talk about some of the reasons why because you still think that it's a good market to be a buyer. Because, I think that there's some people that either haven't purchased before, or, maybe they've purchased one or they've invested in one, but everybody knows that it's a hot market, both on the residential side and also on the multifamily side. And there's different schools of thought, like, hey, we're at the top and I'm getting out, or, hey, I'm a buyer and a seller, and, here's why I'm still buying. And so you said that you are still buying. Provide a little bit of feedback as to, what's your rationale.
Yeah, a very good question. So I would say there are several reasons for why we are still buying. Number one, and these are in no particular order, right? But number one, I would say, the basic fundamentals of what we look for, right, is look for a market that has, population growth, job growth, and therefore you have the potential to have rent growth. And we're still having that. Where we look for properties is mainly in Texas, and Texas, as you know, is a very strong and pro-business state, and so therefore it makes it easier for us to proceed with looking for properties. Inflation is right now we're 5 to 7% inflation, and so real estate is really an asset that's, I wouldn't say it's 100% inflation resistant or proof, but usually when inflation increases, then everything kind of goes downhill, right? And which means that rents also go up. They tend to go up as well. And if you are able to lock in a rate, on your debt at a certain percentage, certain debt service, and your rents continue to go up, then that's another good sign, for us to look at. We are looking mainly for newer quality asset at this point of the market cycle, for better quality and better submarkets and better locations. Like that, if there is a little bit of a resistance or softening in the market, we have that tenant profile that has more of that residual income to be able to withstand any correction or any softening in the market, versus going for a full C-class property with C-class residents that are living paycheck to paycheck. It just makes it a lot more difficult. But yes, I think the other point of that is that we're still in a historical low interest rate environment, right? You can argue that well, yes, you're a historical low interest rate environment, but then your prices are very high, and some people may argue that, well, they correlate or they do not correlate. I've seen it to where they sort of do correlate in a way, where prices were higher. I mean, prices were lower, but interest rates were a little higher. Since then, interest rates have gone down, but prices have increased, right? And so I think that if you're able to lock in a strong, very favorable rate in this environment, you should be good for the foreseeable future there as well. I mean, there's a lot of those reasons, but people also look at prices today, right? Versus maybe, for example, you're looking at a price $150,000 per unit on a deal that's called 123 Main Street, right? And maybe that same deal 7 years ago was $50,000 a door, right? And so you're trying to understand why there's such a big increase in pricing. Well, for one, the rents were at $1,300-$1,400 as they as back then. Maybe they were $500-$600 back then, right? So of course pricing is going to increase, right? That with the interest rate environment being very low, it makes a lot of sense for me to continue to look.
I think you brought up so many great points there. I mean, so many great points. Look, just growth markets in general, like Texas and Florida and Tennessee and Georgia and Phoenix and that all those areas are seeing massive population growth. And the big question mark is, okay, if there is a downturn, in the market, I think to myself, and I'm like, look, if I was living in a high cost environment, if I was on one of the coasts in New York or California, and jobs were hard to come by, where are you going to go? You're going to go someplace where it's more affordable and there's more jobs. So even in a downturn, I think that markets such as Texas and these other growth markets have the opportunity to potentially see continued population growth. And
yes, and you brought up a great point, right? You said downturn, and if you think about it, I mean, this is actually another reason that I didn't bring up earlier. Multifamily has proven to be extremely resilient, right? In 09, 2010, yes, pricing went down, and yes, there was an increase in vacancy, right? But overall, multifamily did well, and it weathered the storm. And then we went through the 2020 pandemic, right? And again, you saw it weather the storm, right? And at the very beginning of the pandemic, we were kind of just buckling up and getting ready for what could have been and what most people thought that was going to be kind of ugly, and it ended up being where multifamily just paused for a little bit and then just continued its strong wind behind it and just kept moving forward. So I think that's another great reason. It's just very resilient, right? It's a necessity, right? Shelter, over your head.
Absolutely. And you also brought up another great point in terms of inflation. If you can lock in your debt service, that's fixed over a certain time period, and then your rents, if your rents are going up by, with inflation, and inflation is, if it ends up being 5% or 7%, well, then you have that big delta. So rents are going up. You've locked in your funding costs. So over time, your profitability continues to increase, which, seems like, you can't understand that. But once you hear the story on it, you can understand it. So that's why people are still buying. They're able to get low interest rates, and a lot of people have the thought that, hey, this inflation is not going to be transitory, which the Fed keeps saying it is. And so if it's not, and rents continue to go up, then that property valuation should continue to go up as well.
I agree. Yes.
The other thing you said was you're going towards more newer quality assets. And I'm hearing that from syndicator to syndicator, syndicator. People that were doing BC. I mean, it's like a consistent theme. People moving from, BC to A or BC to new construction. And, you could understand it from a couple of different areas. One, in the pandemic, people that were in A properties could afford the rent. And people in kind of the lower end, C properties, they struggled more because they're more, paycheck to paycheck. And if they had their hours cut or lost their job, they didn't have the savings to continue to pay. Another interesting data point that somebody brought up to me was that, in that C class, maybe B minus class, the typical approval area is like, 1/3, 30% or so of your income goes towards rent. So, make sure that, the property management company will look for that. But in A properties, I'm being told that it's more like 1/6. So the people in A properties have a much bigger cushion to continue to make those payments.
Yes, and in addition to that, which is you brought up a very good point. That's extremely important, right? For you to be able to collect your rent. Not only you collect it, but collect it on time if possible, and minimize your bad debt. So the other side of that is if they're like, for example, the pandemic that we had, the C class residents, right, which is more workforce. These are people that have to go to work, right? They physically have to go to work and perform their job, right? And because of the pandemic, many couldn't leave their home and go to work, right? They had to stay at home, and whereas more of the A class, maybe B plus residents, a lot of these have jobs where they can still work. All they need is their internet and their computer, and they're good, right? They can continue to work, and that was the whole work from home, uh, you know, um, you know, process that we went through, right? Over the last year or so, and that we're still going through. So they are still able to keep their jobs and still, continue on as if nothing happened, really, right? And so, that's another big point there, right? Just keeping your job, right? Not only paying your rent, but also keeping your job, right? Is very important.
Yeah, and yeah, keeping your job and being able to work remotely is huge in today's environment. Hey, talk about partners, because, all right, so in single family, you're pretty much doing it yourself. And then you get into multifamily, and everybody in multifamily says, hey, it's a team sport. There's a lot of people involved. Now, you talk about it, partners, in a number of different ways. One is we've got listeners that, want to break into multifamily, but they don't know how to find a good partner for their first deal. So, and they don't know the value they bring. So maybe talk about partners on your first deal, and then grow into, all right, now you're partners with a lot of different people on a lot of different properties. How do you get in the mix, and, what's the complementary skill sets and responsibilities for each of the partners?
For sure. Yeah. So my very first deal was a 32 unit that, and I had one partner in that deal, and really the way that happened was, he was a general contractor, or he still is a general contractor, and so it really made a lot of sense for the both of us. I sort of ran the deal, managed it, oversaw operations, and he took lead on the renovations and improvements, and it made a lot of sense. It was complementary skill sets. We both had the same goal in mind, so it made a lot of sense there, right? On larger deals that I've done, I have, for most of the deals that I've done, I've been sort of the lead on these. And by that, what I mean is, I sort of have been the person to put it together. So have the relationship with the broker, put it under contract, and then take it from there, and just sort of build a team around myself, right? And go from there. But, I think it's, when you're starting out, you're wondering, well, how do I get into one of these deals, right? How do I make it happen to where I could be a part of one of these deals? And it's not a clear cut answer there, but really, what it comes down to is understanding what you bring to the table. And when you hear this all the time, but I think everybody has some sort of value that they can bring to the table, right? Because everybody knows somebody that's maybe you. I mean, there's several different ways, right? Maybe you have some financial background, right, where you can help with underwriting, right? Or maybe you have relations with brokers, or somebody, right? Maybe you know of somebody personally that's wanting to sell a deal, right? And they're willing to sell. Maybe you have a property management company, right? Or you're good at managing properties. You've done it, before as a career. There's so many different ways where you can bring value. You can still be working, full time, and get into the game, really, right? As long as you have the team around you, and that bring the complementary skill sets, and where they're going to be committed and investing their time and effort into a deal, right? So I think everybody, or you can have capital, right? That's the other thing, right? You can have capital, you can have a balance sheet. There's so many different ways. So I think that if somebody wants to get in, look at yourself and find out, what you have in value, what you need, and then find the other person that has those other values and bring it to the table and see if there's a way, right? And just because you have some sort of value doesn't mean that you can get into a deal either, right? Because personalities have to match, right? I mean, it's sort of a marriage, right? And in this business, I mean, capital, I think there's no shortage of capital. Everybody has capital right out there. And so try to find something that you can really bring that can be very helpful, is what I would say.
I think that's great. I think you had such great advice there. It starts with mindset. You have to believe that you have value. You have to. If you don't believe that you have value, you are not going to be able to convince anybody else that you have value. to get into a first deal without having that experience. So once you believe in yourself, and you're fully committed, then, you stop taking it personally that somebody doesn't want to partner with you. You just, your skill set, your value may not link up with them, or your personality may not link up with them, but there's somebody else that you're well suited for. So you just got to keep on going out and meeting people until you find the right fit.
I would add real quick as well is if you are more of an introvert, right? I know it can be difficult to sort of put yourself out there, but you have to be willing to put yourself out there. If you don't raise your hand, nobody's going to know that you even exist, right? Raise your hand, step up and step up to the plate and talk to people, right? In my partnerships where, as I mentioned earlier, I usually take the lead role. In some of my partnerships, I've had people that have reached out to me in the past, right? And we sort of, kept in touch and we built that relationship, but they would have never reached out to me in the first place. Then they would have never been in the deal, or at least not in my deal, right? And maybe in somebody else's deal, yes, but it's because they were willing to pick up the phone and call, or maybe I was at an event and they were able to approach me. And I'm not like putting myself or saying that I'm, up here, right? But people are still willing to talk, right? And I think it's very important, right? If I want something, I have to be willing to talk, right? The squeaky wheel gets the grease, right? You heard the phrase all the time. If you're not the squeaky wheel, then you won't get that grease, and you won't, be able to have that opportunity to be able to jump into a deal, right? So I think it's very important, just that simple action, right? That's what it is, right? You talked about mindset, but it's also the action part of it, right? And people can't read your mind, so you have to be be willing to get out there and do it, right? So.
That's huge because, the person that's the lead, so you're the lead on a lot of deals, have a lot of choices on who they can partner with. I mean, it's not like there's just 2 or 3 people. Like there's a lot of choices. So, you have to be, front, mind, center, to win that. And, what I would add is tell people what you do, so that's both for partnerships, and it's also for attracting investors and possibly deals. I had one guy on the show that said, he was talking to his banker and he told him, hey, and it was the president of a small bank, community bank, and he said, I'm looking for these multifamily deals. And a few weeks later, a broker called him and said, hey, I've got this deal. And he said, how'd you even get a hold of me? He said, well, the president of this bank told me you were looking for a deal. Well, they never would have connected had he not told that, the president of the bank that he was looking for a deal. So, and then he ended up buying it, and, that got the ball rolling. So you have to tell people what you do.
Exactly. Great point, for sure.
Hey, talk about preempting deals. One, what does that mean? And then, maybe the difference between preempting, before it's even marketed and versus preempting when the deal is starting the marketing campaign.
Yeah. So preempting basically means that you're getting an early look, right? An early shot at making an offer. And, if the seller agrees to your offer, then they'll take it off the table and maybe make a deal there, right? And why would a seller want to do that? Well, sometimes they're on a time crunch, right? They need to close by a certain time. They don't want to go through the whole entire marketing process, or they don't want their staff to know, at the property that they're going to be selling, so they don't want to deal with that, right? There could be multiple reasons, right? There's different motivations, different reasons, But yes, I think those are great opportunities for buyers to go in and sort of eliminate as much competition as possible, right? Because it doesn't mean that you'll be the only one preempting the deal. It could be maybe 2 or 3 guys that are taking a shot at the same deal, right? So, but it certainly does eliminate the masses, if you will, right? So we have certainly we haven't won a deal that way, but we certainly have made offers, preemptive offers to try to win deals. I think ultimately, from what I've seen is sellers still want their price as if they were going through the entire marketing process, but they're just trying to reduce the time that the deal's out there, right? If they can get their price in a much shorter period of time, then they'll be happy to move forward, right? So, but I think yes, if somebody can take advantage of that, then it's great. I'm actually going through that right now, and it's a smaller deal that it's a smaller new construction deal that I reached out to the broker and I was like, hey, what do you have that's coming up, and we just kind of went from there, and he was like, well, as a matter of fact, I have this one, he's willing to take a preemptive offer. Let me know what your thoughts are, and I'm actually going through full underwriting right now, and maybe make an offer and see if we can get this thing under contract. But yeah, it's a great opportunity. But for you to be able to put in those positions, I think that you have to be able to prove yourself to a point, right? Prove yourself, build good relations with the brokers, because let's face it, they're not going to just send it to anybody, right? They're going to send it to people who they feel good about and who they have had previous working relationships with, So yeah, that's it's great. Those are great opportunities to be able to lock something up.
Yeah, absolutely. So, I mean, it's a win-win because, as the buyer, it's extremely competitive out there. You're having a lot of offers on every marketed deal, and then you go into best and final, and then a lot of times it's another best and final after that. And so the price can really run up, and then, each of the buying groups have invested a lot of time and effort. And, when it gets near the end, they don't want to lose the deal. So a lot of times everybody gets stretched pretty far. So being able to preempt takes away some of that competition, locks the deal up quicker. The benefit to the seller is that, look, if they have a certain price in mind and they're able to achieve that price and also have the confidence that they've got a strong buying group, then, that's a win for them as well. So they may, if they've gone through the entire marketing process, may have gotten a higher price, but you don't know who that higher price is coming from. It may be coming from a buyer group that, isn't as experienced, and, it's a risk going with a group like that because they may close or they may not close.
That's exactly right. Yes.
Go ahead.
No, and I was going to say, why would a buyer, proceed with a preemptive deal, right? If you're going to end up paying the same price that they wanted anyway, right? Why not just go to the process and maybe even get it lower, right? If they have a price in mind and you go through the process and the market tells you that you can't get that price and you're going to get it for lower, then why not just do that? Well, the preemptive, choice sort of more or less guarantees you a strong opportunity to be able to buy the deal, right? Versus going through the competitor process. But yeah, I just wanted to add that really quickly. Yes.
Yeah, absolutely. So I thought that you did win a deal from a preemptive offer.
So
the Dallas deal, South Dallas
that's
deal.
a great question. Yeah, that was off market. Yeah. Yes. So yes, that was. I guess you can call that one a preemptive, deal. Yes. It was an opportunity where we, the seller, right? He's actually been one of your partners, and so we were provided the opportunity. This is a couple years back. That's why it was almost 3 years now, right? But yes, right. We took a quick look and we liked it and we proceeded with the purchase on that one. Yes, so you're correct.
I mean, so listen, listeners, this is an interesting story because, one of my business partners told me that he had this other property and he was going to be potentially putting it up on the market at some point. And he asked me if I had interest. And I said, I did have potential interest. Well, next thing you know, the deal is in contract and I didn't even know that it was available because this guy and his partners, came through, with a broker and did a preemptive deal and locked it up. And I'm like, what happened? And he's like, well, man, they gave me an awesome price and we're done, So it definitely can happen. So talk about, I don't know if you've had any of these, but you're in a number of different deals. Any challenges that came up and how you guys, figured out how to, work through those challenges?
Yeah, for sure. There have been a number of different challenges on different deals, right? Um, the deals, for various reasons, right? But I guess for one, COVID-19, right? And I think that's across the board, right? With a lot of different groups, a lot of different properties. COVID-19 brought us challenges, for sure. And really trying to assist residents with rental assistance and make sure that they're on track and not being evicted, or we couldn't evict because of the eviction moratorium and one reason or another, right? And so that one definitely had its challenges. We're going through one property that still continuing to have some challenges in Phoenix. Our income has definitely gone through the roof, which is a great thing. But the challenge on that property has been more on the maintenance side. Plumbing issues has been the overwhelming majority of the issues that we've had. And these are things that you don't necessarily account for 100% as they are today. You underwrite to a certain point, but you don't expect these to continue on that way. And so that one has certainly brought us challenges. And we've been taking punches, and just moving forward. And but overall, the property is doing well, but it could have been doing a lot better, had we not had these different maintenance issues. And it's just one of those things where you account for it as much as possible, and you have to be willing to move forward and take care of these issues without letting them get any worse.
Yeah, absolutely. So let me talk a little bit about that on the maintenance side. So I got involved in real estate, multifamily, like 3.5 years ago, and that was one of my fears. I've been trading loan portfolios. I have another business. I trade loan portfolios, residential, multifamily, and commercial, and multifamily has always been, very strong performer from banks' balance sheets. And I like the asset class and understand it. But, I was always like, okay, well, if we buy a $10 million or $20 million property, I'm not an engineer. I don't want to buy it and have all these, issues that I can't see, that I don't understand. And so I want to explain to listeners that, when I got involved in the multifamily mentorship group and started talking to other people that own these large properties, that was quickly dispelled. It was, hey, you just hire, an expert, and there are experts that go out and do inspections of these properties, and they'll come back to you with a report that shows, hey, look, you got 10 buildings and one building has foundation issues, and hey, we scoped all the lines of the plumbing, and here's some issues, and I didn't realize that happened. So I kind of was always worried that I'm going to buy an asset and have stuff that I didn't know about, but that doesn't happen. I mean, sometimes things can happen where it's out of this scope and you can't know it's going to happen, but there's also a lot that can be uncovered during the due diligence process.
That is correct. And that's what those guys do, right, for a living, right? You pay them for their services, and they're able to walk through all the units, check out the roof, check out the plumbing, scope the plumbing lines, check out the electrical, and give you this big report that you can then further make a better decision on whether you want to move forward with the property or not, or you can or you can adjust your CapEx budget moving forward.
Absolutely. So you have a podcast called the Commit to Wealth podcast. Talk to us about when you started it, why'd you start it, who are your listeners, who do you bring on as guests, and kind of what the value of doing that.
Sure. Thank you. So it's a podcast that I started in 2017. It is called the Commit to Wealth podcast. And sort of, the way I started it and launched it was, honestly, it was because I had a big fear, right? That was really one of the main reasons why I started it, because I wanted to get out of my comfort zone. I made it really a goal of mine to get out of my comfort zone, and hopefully that would help me to be more comfortable, when speaking to people, right? Whether in person or via a video call.
Was that the fear like public speaking,
100%,
talking to people?
100%.
Okay.
You know, I felt that I was an introvert in a big way. But I also, you know, in addition to that, I wanted to learn more about real estate. I wanted to learn more about multifamily. I want to learn more about how people are putting their deals together, and maybe take some ideas, you know, and you know, to, you know, get to the point where, you know, if I was doing deals, then maybe I would be able to you know, take some of that advice, or you know, just to help out audience members with the interviews, not from me, but from the guests that I was having on the show, and just really them relaying their message and expertise, right? So combination of different reasons. You know, guests have been you know, guys such as yourself, right? Which we need to get you on. Speaking of that, but
Absolutely.
yeah, just guys that are willing to share their stories, willing to share their time, right? Because, you know, time is valuable, but they're willing to take, you know, an hour out of their day to you know, provide some you know, their message, and provide some insights into how they're doing their business, and, you know, some tips and tricks, you know, for other guys that are looking to be in their shoes one day, you know, something similar. So, but yeah, it's you know, we did it for a few years. We'll be right now we sort of are in a gap, you know, to do a season 2 here coming up in the next year. So we're excited to get that relaunched and get that going, and you know, just it's exciting. You know, it's just be able to talk to many people, and really, you know, one exciting point for me personally, honestly, is building relationships with others in a closer way that you wouldn't have been able to had you not had some sort of platform like a podcast. So I think it's multiple reasons for me.
Yeah, I mean, I love it. I love it. And I've experienced a lot of the same things. So one, I wouldn't have thought that you had that fear. Like, look, you know, it's so interesting because you think of people that do a podcast or you know, or whether it be people that are on stage as a, you know, a band or whatever, and you hear people say that they're, you know, afraid to talk to people, afraid to get out in front of people, and like, well, why would you do that? And you said something like you were forcing yourself to get uncomfortable. And so many people that I have interviewed, you know, they continually achieve a goal, and then they set a new goal that is uncomfortable, you know, in whatever facet it is, whether it's going bigger or trying something new or whatever. And, you know, in my experience in life, like, I'm the most excited when I'm learning something new and I'm pushing myself someplace that I haven't been before, versus just doing the same thing over and over and over again. Right. But you don't, you know, it's, you have to force yourself to do it. I mean, it's hard. It's hard.
It's very difficult. Just thinking about you putting yourself out there in these uncomfortable situations. But man, I'm telling you, like, ever since I've done, you know, I've done this and been out of my comfort zone, it really has made everything so much easier. It's like, if this was my biggest fear and I just did it, I've done it before, I know I can do it again, and nothing's going to happen. You know, you're thinking that, you know, maybe you're going to be embarrassed, maybe you're going to be hurt, or somebody's going to say something to you, or maybe you're not qualified enough, or you're giving yourself all these reasons why you shouldn't do it, but you're not really giving your negative talk. You're right. But you're not really giving yourself a chance. You're not really telling yourself, well, why should I do it? And these are the reasons why I should do it, right? And so you're thinking more about the negative than you are the positive, and you know, you're not really doing yourself a disservice by doing that, right? So I think if everybody, if you're in a similar situation out there listening, really think hard and you know, about, you know, the positives and why you should do it. And those positives should be, you know, much bigger than those negatives. Those negatives, you know, should be much smaller. And just do it. You know, nothing's going to happen. You know, your fears are not going to happen, and things will be just fine. So I really encourage everybody to get past those fears and get out of your comfort zone, because really growth does happen on the other side of fear in your comfort zone. Yeah,
absolutely. So, in terms of, you know, there'll be people that will listen to your podcast or my podcast, you know, a few episodes, right? But we're recording every single one of them. right? So we learn from every guest, like you said. So you got past your fear, but also you can learn. I learn a little snippet from every guest that comes on that I never would have learned had I not done it. And then secondly, you mentioned, just getting exposure to people. I've partnered with a number of people that ended up coming on as guests, like you are spending, half hour or an hour with somebody that you wouldn't have spent otherwise. You go to conferences and you meet people and you see people, but you may spend 5 or 10 minutes and it may be much more surface talk and you don't really get to know them as well. So that's a huge another benefit. The other thing is that this is, everybody tells me multifamily syndication is all about finding deals and finding investors. So it's an opportunity to educate new investors to get involved. It's also an opportunity to find partners and grow from there. So that's fantastic. Look, it's funny how you said that, because you had a podcast I started mine last summer sometime. So 2020, you started you said 2017. So 2-3 years before, right?
2017 or 2018. I think it's actually 2018, okay. if I'm not mistaken.
2018.
Yes.
Okay. So still 2 years prior to me. And, I know Juan's got this podcast and, it just, I don't know, gave me the impression that you totally knew what you were doing, like gave me like credibility to you. And, I want to learn from this guy. Like this guy, he's connected with a lot of people, and then I learned when you start that you were afraid, like, but like, you don't think that, other people that I've interviewed that had 3,000, 4,000 units. I'm like, one guy was from India. I'm like, do you just have a ton of people in India that just like wire money to the US? Like,
yeah. It seems that way, right?
Yeah, like, because you feel like it's overnight success, but he's like, no, man, the first deal was tough, but then we gave a good return to the investors, and then the second deal got a little easier, and then you get a little easier from there. And I'm sure you see the same thing, in terms of asking guests to come on the show, finding partners, finding investors, all of that. It takes time to build that.
It does,
but then it gets
easier.
It's
repetition. It's performance. It's communication, right? If things don't go well, you communicate it, right? Showing your face, right? In those toughest times, and really, for me, that builds a lot of trust. So I'm a limited partner as well, right? So I take a lot of the limited partnership side and put it to action on the GP side. Well, maybe you're thinking, well, what exactly do you put to action? The communication, the reporting, right? Or the lack of reporting that we won't get, right? I'll make sure to, hey, with some of these deals, I'm not getting reporting. I got to make sure that I do report for my investors. And what does that do? That builds trust, right? That tells you that, hey, you're not hiding away from the issues. You're confronting them, and you're telling your investors, well, look, this is what happened. This is how we're going to address it, and this is what's going to happen from there, right? So you have to be willing to do that. And like I said, I've had my fair share of deals where the guys don't communicate, and they kind of sort of go dark. And I'd rather you just tell me, hey, look, if things are not going well, we're all adults here. Just be honest and tell us, about the process and what's going on, and let me feel more comfortable about it, because you told me, and so I think it's very important that you do that. And if you don't, then you're losing some credibility there.
Yeah, that's a great point. You brought it up earlier that you thought that being an LP, helped you become a GP. And I think that that's important. I would recommend that to anybody that, if you've got the capital to get into at least one deal, then you see the reporting that comes back. And, most syndicators are going to send you an email on a monthly basis that outlines, here's what's going on with the property. and then they're going to provide, the financials, so you can actually review the financials as well. And I'm like you, I like transparency, and if something's going, I want to know the good, the bad, and the ugly, and then if it is bad, I want to know, what action steps you're taking, and that helps me know that, all right, this property has an opportunity to kind of turn around. And it also is another learning lesson for me. If they do something and it works, then, hey, I got that in the back of my head for one of my deals, if I see that happen. So I think it's important to see that. The other thing I want to tell listeners is, look, whether you're just doing a passive deal for the first time or just getting into your first deal or whatever, and, maybe you don't want to start a podcast, but maybe you can start posting some stuff to Facebook or to Instagram. Tell people what you do, okay? And there's fear in doing that, okay? There are people that will judge you, and that's the big fear, right? But you're not doing it for them. You're doing it for the other people that they have interest in it too, but they don't know how to do it. And, a year or 2 or 3 down the road, when you get your first deal, they're going to all of a sudden come to you and be like, hey, I was watching you and, I admire that you did that. And can you help me? And so I think that's lost on a lot of people. They're so focused on, how do I get my first deal? How do I get my first deal? And it's all about them. But they don't realize the ripple effect they can have once they get that first deal and helping other people afterwards.
That's a great point. I think that, we're all in the same position or close to the same position as another person out there, right? And so, you could be the person that's knocking on the door of maybe thinking about leaving your W-2 and jumping into like an entrepreneurial endeavor, right? Maybe it's multifamily or something. But then there's somebody else out there that's sort of thinking the same thing, right? And so if you're able to take action steps or speak up and you're sort of speaking on their behalf as well, right? So, like you said, people appreciate that. They admire that. Maybe they didn't have the opportunity to speak up themselves or ask those questions or put themselves out there, but you were, right? But it also shows that, hey, you're able to do it. So if you're able to do it, then maybe that gives me the optimism of being able to do it as well, right? So it's very important that we all, sort of rise together and go for our goals, right? I mean, I think it's they're right there in front of us. I mean, we live in the best country in the world, right? And best country in the world by far, hands down. And so, people come here from all over the world because of the opportunities. And so I think, we have to be able to take advantage of these opportunities, right? Because they're right in front of us. But you got to get past the fear, get past your comfort zone, right? Because they're right there, and that's why, I think, and not to get off subject, but that's why I think a lot of immigrants are so successful in this country, right? Because you sort of come from a country where you went through a lot, right? A lot of struggle, and you come here and you're not afraid to go through that struggle again, right? You have certain goals and that you put you set yourself for and you go after them, right? And sort of being raised here, I was born and raised here, right? You sort of become a little complacent, right? And it's like, well, I'm already here, and you sort of just you go about your day to day and without really pushing harder, right? And you take things for granted to a point, right? I don't know. That's just my thoughts there, but I think it's important that we keep that fire. We keep that fire and going.
I completely agree. A gentleman that we both know, David Anko, had him on the show, and I didn't know this, but he said that up until like 1989 or something like that, late 1980s, it was illegal to be an entrepreneur in Russia.
Oh, wow.
It was illegal. You could not buy a product and then mark it up and sell it to somebody else for more. That, to me, is mind-boggling. So, here in the U.S., we've had, you could be an entrepreneur for years and years and years. You could do whatever you want, build whatever business you want. It was illegal. I mean, that's crazy to me. So, hey, what's the next big stretch goal for you, man?
Yeah, so I would love to be able to continue, right? Continue, growing here in Texas mainly. Love to be able to get into some nicer, newer quality assets here in Texas, and really be able to provide some very strong returns for our investors. And if I can change some of their lives, even in a small way, then that's exciting. Really be able to spend more time with family, which is very important, and be able to give back, and through different charities and church and all that good stuff. So I think it's our I see it as a responsibility to if I can be able to push hard on the business side, then that means I can be able to help more people on the charity side. So I think it's something that I have to keep pushing towards.
Awesome. What do you like to do outside of work?
Outside of work, a lot of different things. I mean, I like to get outdoors. Outdoors is really it's awesome. Hunting, fishing. I'm a big gun person, so I love shooting. I love sports. So go Astros. Love sports. All sports and spending time with family, right? I think that's what it comes down to: spending time with family. Whether it's just staying at home watching a movie, or just going somewhere and doing things with them, going to water parks, going to different recreational centers. Just
you have young kids? How old are your kids?
Yeah, I do. 7, 10. They just turned 7, 10, and 13. So he'll be 14 in December. So yeah, they're not very young, but yeah, they're still young. You're young enough to be able to spend a good time with them. So it's awesome.
Absolutely. Well, how can somebody reach out to you if they want to get to know you better?
Yeah, sure. Thank you. People can reach out to me via the website at genwealthcapital.com. That's genwealthcapital.com. Or they can send me an email, Juan@genwealthcapital.com. A couple other ways is through social media. So just Facebook, Twitter, Instagram, LinkedIn. Look me up and I'm happy to connect.
Awesome. Well, I appreciate you coming on the show. Hey, listeners, also check out his podcast. He's been doing it for a lot longer than I have. He's a mover and shaker, and he's partnered with a lot of people, and he has a wealth of information. So appreciate you coming on. Listeners, I hope that you enjoyed that one. Until next week, signing off.
Thank you for watching Darren Batchelder's Real Estate Investing Show. If you liked the episode, please click the like button and subscribe to the show. If you already are subscribed, then thank you. And please share the show with a friend. Check out other free resources at darrenbatchelder.com/learn.